New Fed paper warned, brace for impact. The end of Walgreens WBA stock. Why it's a value trap. Who's the second best investor in the world? Does anyone know? The strength of the transmission of monetary policy depends on the aggregate distribution of firm financial distress. Firm investment and employment respond strongly to contractionary monetary policy when firms are in distress. Why Walgreens Boots Alliance WBA stock is a distressed firm, with the share of distressed firms currently standing at around 37%, which is historically elevated. Our estimates suggest that the recent policy tightening is likely to have an effect on investments, employment, and aggregate activity that are stronger than in most tightening episodes since the late 1970s. The effects in our analysis peak around 1 or 2 years after the shock, suggesting that these effects might be more noticeable in 2023 and 2024. Why this is the end of Walgreens WBA stock, a big value trap. I will explain it all right after this.
How you like that? How you like that? Look at you, now look at me. Look at you.
Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video. Because you're already a success, it is done when you join the Audacious Money Witch Club. This video is brought to you by my website. If you are a good boy, go to audaciousmoneywitch.square.site to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You want to join the Audacious Money Witch Club, don't you? Walgreens Boots Alliance Incorporation shares plunged 9% on Tuesday after the company slashed its full-year earnings guidance and missed Wall Street expectations for its fiscal third quarter due to a more cautious and value-driven consumer. The drugstore chain and healthcare services company revised its earnings guidance lower to a range of $4 to $4.05 per share for the full year, down from its previous estimate of $4.65. Adjusted earnings were $1 per share. Missing analyst average estimate of $1.06 per share. Adjusted gross margin 18.8%. Estimate 20.4%. Our revised guidance takes an appropriately cautious forward view in light of consumer spending uncertainty, while still demonstrating clear drivers of a return to operating growth next fiscal year. CEO Rosalind Brewer said, "We are raising our cost savings program target to $4.1 billion and taking immediate actions to optimize profitability for our U.S." Shares of Walgreens plunged 9%. If losses hold, the stock will hit the lowest level since 2010. The earnings miss is the first time Walgreens has missed Wall Street analyst expectations since July of 2020. Significantly lower demand for COVID-related services, a more cautious and value-driven consumer, and a recently weaker respiratory season created margin pressure. Why WBA stock just made a new decade low is because their balance sheet is really bad. They have a current ratio of 0.63, meaning they don't have enough current assets to pay their current liability, which is a dangerous value trap. Another Jeremy stock bites the dust. This ain't no joker. When the rest of the world is fearful, we'll grab all of the opportunities that we can handle and not lose a day of sleep, said Warren Buffett, the best investor in the entire world. Everyone knows who's the best, but do you know who is the second best investor in the world? Does anybody know? His name is Rakesh Jwanawala, and he's been called the Warren Buffett of India. Starting with a $420 grub stake in 1985, he amassed a fortune worth $5.7 billion by 2022. That's a 65% compound annual return. First, a little about Rakesh Jwanawala. He was called the Big Bull for his outspoken and relentlessly optimistic view of India's economy. He began actively trading in college and went on to run his own stock trading firm, Rare Enterprises. He loved to do deep fundamental research. As he once said, a balance sheet is like a bikini. It shows more, but it hides what is vital. I learned to read a balance sheet, and then I got fascinated with stocks. Sadly, Jwanawala passed away in 2022 at 62 due to prolonged health complications. It's hard to imagine what he would have accomplished if he had the same long runway that Buffett has enjoyed. Based on available data, he was the world's second best investor who achieved 66% annualized returns during his career. Let's explore some of the big bull's investing rules. Look for companies with a competitive edge like Buffett. Jwanawala sought to find companies with a competitive edge whose success would be hard, if not impossible, to replicate. His philosophy was buy right and sit tight. He preferred to search for small cap stocks and wanted to establish a position before the stock was on most investors' radar. As he said, never invest at unreasonable valuations and never run after companies which are in the limelight. Family-owned businesses tend to outperform. Look for businesses with generational skin in the game. You don't have to be right all the time. One of the common myths about investing legends is that they're right most of the time. If we look at the big bull's track record, he was wrong many times, particularly during the dot-com bubble. While being wrong often, he was successful because he consistently identified stocks with 10 to 50 times upside potential. He would scale up his position in these stocks, which further compounded his money. These 10 to 50 baggers more than made up for his losses. Trading versus investing. Jwanawala viewed himself as a trader in the first 10 years of his career, but he sought to build up enough capital to later become a long-term investor in undervalued companies. Early on, he took very concentrated positions in high-conviction trades. As he built up his capital, wealth preservation became much more important to him. He felt active trading kept him sharp and in touch with the markets, and it was something he loved to do. Don't blindly follow famous investors' picks. Big Bull warned, against following rumors or trades of legendary investors.
Your perspective on Tattoo Chef, and if you think this is a potential huge stock in the future. Now, my hope with this stock is if people want to invest in this company with me, I'm hoping that people are really in it for the long term, because this is a type of company that has like 5, 10, 15 years of huge growth in front of them.
He urged folks to do their own research, rely on their own thinking, and develop conviction in their trades independent of pundits or famous investors. Advice for beginners: investing is a full-time job that requires continuous monitoring. He suggests beginners take their time and make informed decisions before investing, and recommends spending as much time researching a stock as you would your first home. He often recommended books by Victor Sperandio, also known as Trader Vic. He suggested always starting with a small position because mistakes are bound to happen and the markets can be merciless. Wrapping up, while he was arguably one of the best investors of all time, the big bull had an interesting relationship with money. He said it's a means to an end, but it cannot be an end in itself. Money is freedom because it means I don't have to do what I don't like to do. Our favorite big bull quotes: markets go up not because there is an abundance of buyers, but because there is a lack of sellers. Markets tend to shake you up before a bull run. Growth comes from chaos, not order. Never react and change your investment decisions according to daily business news. Panic selling is a bad habit. I am not a clone of anybody. I am Rakesh Yuanawala. I try to bring more balance between investing wisdom, short-term technical data, and macroeconomy. If you're still here, I have a free ebook, The Ultimate Investing Checklist, the one that Warren Buffett uses. The link is in the pinned comment below. Please check it out, and I hope you enjoy it. My book, Believe You Are Worthy. You are such a good boy for watching my video right till the end. Bye.